Hello, good morning, everyone. I'd like to say good morning to everyone and thank you for joining us here at the from the German American Chamber of Commerce. We were happy to have a longtime patron member, Lackton, with us here today for our webinar, giving us a very on-point and topical presentation on what to expect from my insurance now that we're in this, let's just call it a strange environment. Gonna kick things off here a little bit before we turn it over to Lackton. Just talk about the chamber a little bit, and I'd like to introduce myself. My name is, of course, Matthew Hoppy, and recently brought on at the chamber in a role for the membership engagement, and I'll be moderating today's presentation. We are encouraging questions to be submitted. If you have a question during the presentation, feel free to submit that, and then after the presentation, we'll go back and answer any questions that might appear. We'd like to try, I know, because webinars can be a bit stale and static. We'd like to try to keep it as interactive as possible here this morning. Just a little brief announcement about the chamber here. Of course, the chamber here in the Midwest is located in the Chicagoland area with a few offices scattered throughout the United States, and of course it's a member of a large network of chambers abroad as well, located around the world. And here, just in Chicago, the land area for the Midwest, up to 800. We have currently about 850 members, and we're going to be handling not just the Illinois and Chicagoland area, but Colorado, Minnesota, Wisconsin, as well as Michigan. And as you can see, membership in our network offers many benefits, but I think what you're seeing here today is really a primary membership asset, and that's going to be access to our network and utilizing our network in order to connect with members such as Lackton in order to access industry expertise on various business issues that, and again, not just something as far as between business in Germany and the United States, but something that's very topical as far as insurance and during these strange times. Again, as well as hopefully, it's a platform for just to connect with firms and businesses engaged in cross-border business. Obviously, in the current situation, we've had to move most of our events online, and we're doing that. But again, hopefully sooner rather than later, we'll be able to have these more in-person kind of events. But we definitely have a presence both online with our webinars, as well as websites and LinkedIn campaigns, just again to keep connected with the German American business community. And with that, I'd like to say thank you, give a warm welcome to Lackton Enterprises, and again, thank them for sharing their expertise with us here this morning. Again, they're a longtime patron member of the Chamber of Commerce. We couldn't be happier to be able to present this information to you here this morning.
Well, thanks, Matt. This is Kevin Holland. Today's topic, of course, is going to be, will the insurance pay? It's been a hot topic not only on the news and probably within your own firms, but also it's become quite a debated topic within the politician space as well. So with the massive disruption caused by COVID-19 and the resultant shutdown, we've seen a great deal of conversation within our firm as well about what should our clients be doing here. Today's discussion is going to address what you can expect from your insurance companies and what are the best practices to be prepared to make a claim in case you do have a covered loss. We're going to frame up today's conversation in terms of work injuries and illnesses among your employees, potential increased costs and loss of revenue for your business as a result of COVID-19, management liability issues, and this is really getting to the heart of the directors and officers and decision makers at your firm, employment practices liability, which is going to address what happens when someone's furloughed or loses their job or maybe isn't treated fairly by your firm from their perspective. We're going to also look at cyber risk and then sort of take a future look into what next. On today's call, we've got some experts from within the Lockton family. We've got Ms. Madeline Allen, who's a unit leader in our cyber practice. We've got Mr. Zach Soba, who runs our property and business interruption practice out of Kansas City. We've got Andy Hodges, who's on our management liability team, and Mr. Andreas Schroeder, who's one of the leaders of our German practice. Real quick plug for Lockton. Of our 100 offices globally, 50 of them are in the United States. Our headquarters is Kansas City, Missouri. And among our clients in the United States, we've become quite good at handling the US operations of German parent companies. So we count about 250 US clients whose ownership resides in Germany. And we've got a team of 45 cross-border specialists across the United States who are focused on handling this type of risk. I'd like to introduce Mr. Schroeder real quickly. Andreas, can you give us some quick background on your role historically and some perspective on the US markets?
Yes, Kevin, thank you. I will. Yeah, so as Kevin said, my name is Andreas Schroeder, and I'm with Lackton now for almost 2 years after I was a risk manager for over 14 years and spent half of that time in the US. I'm a German that came to the US 2011. When I had the job, I got challenged with differences between the US and Germany with respect of the legislation, the terminology, the coverage differences, and many cultural aspects of markets and the way things are handled. So I found it extremely helpful to rely on a professional partner on the broker side whose expertise and also service helped me to navigate these differences and challenges in the day-to-day business, and also to better understand how to efficiently deal with the US insurance and risk management topics. Therefore, I can only highly speak from my previous profession about Lackton. So, Kevin, with this short statement, I give it back to you for the really important part of the webinar and have the experts speak about the topics.
Great, thanks, Andreas. We'll go to the next slide, and our focus here is going to be on worker injuries during coronavirus. We really look at 4 potential scenarios that could pop up. The first one is one that I don't think a lot of people think of, which is what happens if I have an employee who was injured prior to coronavirus, and now that my business is perhaps operating remote or we're shut down, what happens to that employee's claim? And then the next 3, I think, are pretty easy to understand. Essentially, we've got one essential employee who can't work because they've been required to quarantine or self-isolate due to potential exposure. The next one is if an employee tests positive for COVID-19. And the last one is if an employee alleges or indicates that they got the virus from work. The first one is going to be an employee who was injured prior to coronavirus. And what do we do with that open workers' compensation claim? Essentially, you as the employer would need to continue to make workplace and job accommodations for that injured worker if they had been brought back to work. Or if the business is completely closed, then the regular employee benefit statutory wage replacement is going to continue under the workers' compensation insurance until that employee either is released by a doctor or they're able to fulfill their pre-injury work responsibilities. So essentially, there's really no change for that ongoing claim other than they may be working remote instead of coming back into the office. The next three we're going to address with just one fell swoop. Essentially, if an employee must quarantine or self-isolate as a result of potential exposure to coronavirus, or if the employee tests positive for coronavirus and can't be at work, or if the employee alleges that they got the virus from the workplace or as a result of work, then statutory workers' compensation benefits will apply. The worker compensation insurance carriers don't have the option to decline coverage because they don't want to pay the coverage or because of any sort of exclusive language on coronavirus. Instead, workers' compensation is what we call a statutory benefit, meaning that the laws of the state in which that worker's employee benefit or work comp benefits would apply, those are what determine coverage. All we can say right now is that if a worker claims that they received or they got coronavirus through the workplace, or if someone in any way says they're not working as a result of coronavirus, you should reach out to your insurance broker and insurance carrier to verify if it makes sense to make a claim. There's a lot of movement in the legislatures right now, specifically California and Illinois, where they're creating some presumptive laws around workers' compensation and COVID-19. Some statements have been made from various governors in those states in which there would be the presumption that certain workers, in some states it's only critical response or emergency response workers. In some states, it's all workers, that if they got coronavirus and were employed, that there would be the assumption that it happened at work. This is still a developing space, and there is no hard and fast rule yet. But our best practice rule is that if a worker has coronavirus and there's any indication from the worker or from your own records that it may have been transmitted at work or in the course of work, consult with your broker, consult with the insurance company, and think hard about making a claim. Secondly, if a worker has coronavirus, there could be an employee benefits response for health insurance. And the US federal government has offered recent guidance on this just a couple of days ago, which very clearly outlines that any testing or services rendered for coronavirus are absolutely covered by a health insurance policy. There are no opt-outs here. Whether you have a self-insured plan or a fully insured plan, these services are covered by health insurance. In addition, one important change is that co-pays no longer apply to COVID-related testing and services. Co-pays are the costs that the employee bears when he or she goes to the doctor. Those co-pays do not apply in these cases. There may need to be some amendments made to your own health insurance plan, self-insured plan, or stop loss to make sure that your policy is in compliance with the federal mandates. These amendments can be made through your broker and through any other firm that's arranging your health insurance for you. And then lastly, and most tragically, if there is a loss of life, then there is no exclusion on a standard policy for a life insurance policy for a COVID-19 related fatality. Again, if there's any questions about worker injuries or illnesses resulting from coronavirus, we highly recommend getting with your agent or broker to make sure that you've got the right accommodations in place. We'll move now to any lost revenue or additional costs that might result from the coronavirus for your operations. And I'm going to ask Zach Soba to jump in here in just a moment, but I'm going to kick us off. There's 5 possible scenarios that we see. A, your firm loses revenue because customers aren't paying. 2, there's some increased costs of operations as a result of the coronavirus for you to maintain your active operations. 3, could be that a supplier doesn't perform on their obligation as a result of coronavirus. 4, there can just be a complete work stoppage and lost revenue due to coronavirus, or a work stoppage and lost revenue due to a government order. I'm going to have Zach talk about the property insurance and business interruption considerations, but as many of you are aware, the US government has stepped in to provide some solutions. The first one is the Paycheck Protection Program, or PPP. It was recently funded again, although we don't anticipate that those funds are going to last for all that long. This is for short-term payroll loans that are forgivable under certain conditions. And if it's not forgiven, it's a very low interest rate of 1% that doesn't start for another year. There's a number of other government loans, including the EDL or Main Street Loan Program. These might be challenging for some German parent companies operating in the United States, however, as they do require a personal guarantee of some sort. And we do fully understand that many foreign-owned businesses in the United States are reluctant to offer such guarantees. There's still work being done to determine affirmatively if foreign-owned businesses can receive these additional government loans. We do know that the Paycheck Protection Program is available to non-US owned firms with US operations. And then the third one is a potential pandemic backstop coverage for insurance losses related to pandemic events such as coronavirus. This is merely theoretical at this point and would be somewhat similar in construct to the Terrorism Reinsurance Act in the United States, which was a result of 9/11. With that, I'm going to pass it over to Zach. Zach, could you give a quick introduction and then jump into the property insurance business interruption considerations?
Thanks, Kevin. This is Zach Soba. I lead the property and business interruption group in Kansas City for Lackton. And what we're focused on is helping clients purchase property and business interruption coverage. So on the property side of it, we're looking at covering your assets from first-party loss, as well as the potential interruption to your business in order to make your firm whole in a loss event. When we look at property insurance policies, the most common trigger to force that policy to pay is a property damage, so physical loss or damage. And when we look at the COVID-19 situation, most of the time when carriers, the insurance carriers are looking at this and contemplating claims, the first piece they need to look at is there property damage? There's been quite a bit of discussion around this. There are some policies with small sublimits for pandemic cleanup or contamination cleanup. The property damage piece will likely end up being litigated over time, and with the chief trigger item on that being, does the presence of the COVID-19 virus on your location, at your location, or infecting people at your location, does that constitute property damage because of the cleanup? This will probably be litigated over the next several years, and there will certainly be continued political activity around this. We have seen politicians push to force insurance carriers to pay, to force them to have coverage that maybe was not intended originally. As we look at all of the property policies out there, I would say the majority of them will exclude cover because there's not a property damage trigger, so there's no physical damage. But there's very much a wait and see on some of that. When we look at the potential losses and what is potentially harming the firm, the key on this is to keep track of expenses and what potentially is happening and what that impact would be, not only for a potential insurance claim, but there could also be tax implications eventually. There could be some loan implications with the governmental contracts, all sorts of different things that could happen as a potential recovery as the political area changes over time and potential litigation in the insurance world continues. In terms of items to keep track of, putting together a special code within the accounting group to track labor, to track any shipping, any additional shipping, additional charges you are incurring, any of the additional cleanup or sanitation expenses, loss of income from not continuing operations. There will certainly be questions as that goes on, that documenting it now will make those much easier to answer and prove going forward. One of the main questions will likely be, is the actual loss of income something that is a delay or something that is going to be missed completely? So is it, and then a lot of that will depend on the industry in which you are operating. Here's where we have the separate ledger for COVID-19 losses, notes on how you respond, documenting all the dates of closures, shelter in place, etc., describing the impact on normal operations, and then obtaining any copies of the governmental order or what forced the shutdown to document all of those items, and then any of those costs that you incurred trying to prevent either infection on your location or protecting employees.
Thanks, Zach. I imagine that you are involved in quite a few cases right now. Are you finding that firms are having success in keeping separate ledgers, keeping costs tracked, or is that something that they might need an additional resource for?
Many times they're able to use their internal accounting group to make a notation on those expenses, and really keep track of that internally, because it will eventually be the client's duty to prove whatever losses happen. So a lot of times that falls on the accounting group that's doing a lot of that tracking work.
Thanks. I know there's been a lot of conversation about business interruption in the news about whether or not the insurance companies should step up and make payments. And one of the things I've been reading is that the insurance companies probably aren't going to ever offer an affirmative grant of cover here unless it specifically said so in the policy. But there could be the potential for the states to come in through some sort of executive order through the insurance commissioner or legislatures and force payment, perhaps even extra contractually, against the insurers. Do these steps that you've recommended, do those apply whether or not the insurance company pays or if the states force it?
I absolutely believe that keeping track of all this would be important in any way that it could potentially be paid, whether that be a claim from the insurance company that's figured out through litigation, whether the state forces something and uses insurance as a mechanism to pay, or anything in between. Keeping track of that and being able to prove those losses will be very, very important.
So just theoretically, if I've submitted a claim for business interruption, the insurer comes back, says declined. It clearly says here, no coverage if it's a result of a virus. We're done here. it's your recommendation then go ahead and keep track of these expenses because it's kind of a moving target area.
Absolutely. Absolutely. I think the most clients right now will be getting a reservation of rights letter. So maybe not an absolute declination, but the carrier saying, hey, when we read the policy, we don't believe there's cover because of these 3 or 4 areas. This is us, letting you know that we believe there's not cover there, but continuing to track that loss activity will likely be important, however this shapes out in the future.
Yeah, thanks. And to be clear, Lockton's not taking a position on whether the insurance companies should or should not make payment here. Our position is that policies should be clear and understandable to the policy holders, and we really shouldn't have any surprises here. So we're talking about making recommendations regarding process, tracking your expenses and losses, so that if there is an opportunity to get compensation, whether that comes from the US government, from the insurer, or through some sort of court settlement, we think tracking these expenses is an absolute best practice right now. Anything else, Zach?
No, I think that's all the property side of it for me.
Great. Let's look at some of the leadership considerations. I'd like to pass it off to Andy Hodges. Andy, can you give us a quick background on you, and then let's jump into the slides.
Absolutely. Thank you, Kevin, and thank you everyone for your time today. I'm Andy Hodges. I'm a member of Lackton Financial Services practice, and my focus is as a part of our publicly traded and large complex accounts team. My role is to advise and broker management liability solutions for our clients. While it's not probably the first thing that comes to mind in terms of insurance implications for pandemics, economic events, black swan type events, do tend to spawn claims against management in a variety of ways. The 2 most notable lines of insurance that are often implicated either directly or in the fallout that follows events like these would be directors and officers insurance and employment practices liability insurance. So I thought it might be helpful just to kind of think through what we've seen to this point directly associated with the implications of COVID-19. And what we have here is a few examples of actions that we've seen in the wake of COVID. The first 2 are existing publicly traded companies with securities class action lawsuits already in the door. Norwegian Cruise Lines is facing allegations that its management team purposely lied about the implications to the company from COVID, intentionally misled investors to avoid a drop-off in travel bookings on their cruise line. And when the ultimate implications of the virus's impact became known, the stock suffered a fairly large decline in valuation, and injuries in terms of valuation occurred to the investor base. And as a result, they do have that claim in front of them today. Inovio Pharmaceuticals is an interesting one in that essentially the allegations against the management team in that case relate to their public statements made by management with regard to their capabilities to respond in vaccine development and a resulting stock drop that occurred with Inovio. The last one is Zoom, and this is interesting from a couple different perspectives. Zoom is certainly not negatively affected directly by the virus per se, but what's occurred in the days after companies began placing their workforce in an at-home environment as opposed to being in the office, of course, the public at large has increasingly used video conferencing platforms to communicate in the wake of all this. And the the direct events following that is that the public at large became aware of certain privacy concerns and security holes in the Zoom video conferencing platform. And as a result, they are currently facing a privacy-related lawsuit. And being a publicly traded company, there are plaintiffs' bar firms out there right now currently trolling to try and find plaintiffs to participate in the securities class action similarly. So, at times the implication of pandemic type outbreak are direct to the company, and at times they're indirect. And you see both examples here. While these are all publicly traded companies, these are good examples of what can happen in private companies too. The allegations associated with the conduct of those members of management can consistently go between public and private companies. So in thinking about private companies and the implication for D&O coverage, the first thing we think of is, what are the sources of claims? Where would a D&O claim come from for a privately traded company or a privately owned company in the wake of a pandemic response? It's important to remember at this point, in terms of coverage, few to zero policies out there for a private company would have a outright exclusion associated with claims emanating from a pandemic or specifically COVID-19. So the coverage provided by the policy, provided that there is a claim that comes in the door that fits in the four walls of the policy otherwise, would have coverage. What we would expect to see is potential claims coming from either investors or business partners or creditors, possibly customers, as a wake of disruption in the business. If the valuation of the company was damaged as a result of the economic downturn and the implications of the response to the pandemic, then it's not out of the realm of possibilities to see investors or business partners or creditors file suit against the company. The biggest concern for underwriters today is looking forward to ensure that the companies that they are renewing policies with are going to be financially healthy enough to avoid bankruptcy in the wake of the fallout from COVID-19. Other examples would include consumers, and frankly, the Zoom example is a perfect example of that. Another area in which you could face claims potentially would be from governmental regulators. While necessarily, you wouldn't necessarily have a regulatory body overseeing your COVID response per se, there are certainly several industries, insurance, healthcare among them, potentially financial institutions, that would have certain regulatory responsibilities that could spawn claims from those regulators under the D&O. Of course, I'd be remiss if I didn't mention that there are certain exclusions that could apply to a COVID-related claim. Most private company D&O policies are going to have a bodily injury exclusion. They're going to have a contractual liability exclusion, potentially antitrust and/or professional services exclusions. So to the extent that those exclusions apply and are also related to COVID in some capacity, then there could be some degree of borrow coverage. But the COVID-related fallout in and of itself is not a mechanism for borrowing coverage on a D&O policy otherwise. So with regard to our counsel as to whether or not insureds should file a claim at this point. You know, I don't view this circumstance much different than prior outbreaks of infectious disease. You know, to the extent that you have something that is in the door and meets the definition under the policy of either claim and or a wrongful act allegation that is a known circumstance that would constitute a known circumstance for reporting under the policy, then yes, we should file a claim against a D&O policy. If we only know about the vast business impacts to operations, or the fact pure alone that COVID is impacting the business, that's generally not good enough to reach those barriers and thresholds to file a claim under the policy. And we would recommend against doing so for non-specific circumstances. That has certain implications that make it very, very difficult in terms of either moving carriers in future periods or potential impacts in future policies with prior notice exclusions that exist in a D&O contract. And for those reasons, without a specific circumstance in the door that meets those definitions of claim or wrongful act, we would counsel you not to make a claim unless you have those items. Moving on to the EPL, employment practices liability. I don't know if we can get that slide up there. Perfect, thank you. With regard to the EPL coverage, we've seen some degree of claims come in the door already associated with COVID. Although they're not part and parcel to strictly being related to COVID. They're the same types of claims that you would expect anytime you have issues with reductions in force or layoffs, any type of discriminatory accusations associated with people being furloughed. Have seen lawsuits out in the public sphere associated with sick leave to employees. And we have seen lawsuits associated with demands for pay differentiation based on hazardous working conditions. One thing that we would expect to see in the next 12 to 18 months is an increasing focus by underwriters on the concept of reductions in force and or discriminatory behavior in furloughing certain members of the workforce. There's always that opportunity, and the EEOC is constantly looking for outright disparate treatment in terms of what employees are laid off as a result of business conditions declining. So that's the type of thing that we are expecting to see in terms of responses from the underwriting community and potential exclusionary language going forward. Some things additionally to expect in this environment and sources of potential claims. They're all the typical things that you would think of in terms of your wrongful acts that may be alleged under an employment practices policy. Obviously, failure to accommodate employees who have been affected with some degree of contraction of the virus or some need to remain home because they're either concerned with contraction of virus or have been quarantined by a doctor. That certainly falls under that allegation class there. Disclosure of private information. Of course, you always have HIPAA-related concerns with regard to privacy on employees' healthcare records, and that's another one that you have to be careful of. Another thing you'll notice in this slide is retaliation is mentioned in three separate boxes here. Anytime that we have employees who are quarantined or specifically placed at home or furloughed associated with a COVID-related response, the concept of retaliation against one specific individual or a class of individuals is always possible. That's a claim that although there are exceptions to certain exclusions in the policy, retaliation should always be covered as an employment practices wrongful act. Again, you also see the potential here for certain industries like healthcare and essential industries that are still in operation to have the potential for wage and hour-based claims. Similarly to the pay argument above for a difficult work environment, the possibility of certain industries being staffed in a different manner can bring allegations of wage and hour type claims associated with pay not properly being paid or hours not properly being tracked or logged, and that all can impact an EPL policy.
Andy, thanks a lot for that. I know that you mentioned a few of the anticipated exclusions that may be coming along. Have you seen insurers on the recently renewed policies, whether it's the April 1 or upcoming May 1 policies? Have you seen that exclusionary language already added to the policies?
We personally have not, nor would we accept it under either a D&O or EPL policy. I have been informed by various carrier partners that they're hearing rumors of certain carriers adding a COVID-19 specific exclusion to certain policies. Again, that is not appropriate, and that's never something that we would accept as a broker. With regard to the EPL specifically, I have not seen an exclusion implicating COVID directly. What we do see is underwriters adjusting retentions or providing special retentions for layoff activity that is expected in the wake of complaints for COVID. That type of thing is certainly being done on a case-by-case basis. We resist those to the extent it's possible. However, legitimately, if a company has large-scale layoffs planned as a part of the negotiation of an EPL renewal, often there's that trade-off between premium and retention for certain circumstances that determine how an insured would choose to buy insurance going forward. And for that reason, some clients are entertaining larger retentions for that specific thing, or in some cases, paying higher premiums. What we can universally expect and have seen to this point is that underwriters have a fairly large chest of questions that they're asking of virtually every renewal today. Those include specific responses to the company's operations and remediation efforts. They include questions involving treatment of the workforce and how folks are being screened. They also include a pretty exhaustive look at the financial condition of the company. So, balance sheets are under more scrutiny. Credit agreements are under more scrutiny. They are looking at the possibility and potential for a liquidity event in the next 12 to 18 months as a result of the fallout of COVID. So all those are occurring. To what degree we expect or to what degree we will see the marketplace react beyond those measures is still very much to be determined. I would say the longer this drags out, the longer and more deeply the economic impact is felt. That could change, 8, 12, 16 months from now.
Thanks. One real quick question, and I know we don't have a crystal ball, but for the foreseeable future, is it fair to say that directors and officers liability and employment practices liability insurance is still going to be available to firms if they haven't purchased it in the past?
Yeah, no question. That's an excellent question, actually. Absolutely is available for new buyers. The marketplace as a whole is firming, but that's a trend that we've seen in these lines of coverage for the last 12 to 18 months anyway. This does add some fuel to the fire, so new buyers may experience capacity restrictions from markets. We consistently do see that the carriers are looking to limit their exposure. So, years past, you may have been able to buy a $10 or $15 million primary limit policy. And at this point, you may be restricted to a $5 or a $10 million limit policy on either of those two lines. But the capacity is still out there. The coverage is still generally very, very broad, with the exceptions of those items that I had mentioned. And certainly markets are still interested in bringing on good new clients and good risks into their portfolios.
Thanks, Andy. Madeline, thanks for your patience. We'd love to come into the cyber events now. And I know these may not directly arise from coronavirus, but there's certainly an increased visibility here. Could you give us a quick introduction to who you are at Lackton and then kick off some slides?
Certainly. My name is Madeline Allen. I lead the cyber technology practice unit in Kansas City. We are part of a global practice group that is a specialty practice group within Lackton, focusing specifically on cyber and privacy insurance, technology errors and omissions, media liability, and miscellaneous professional liability. The focus of our discussion today is going to be on cyber liability or cyber insurance, and specifically changes that we're seeing to risks and exposures in light of COVID-19. During this global pandemic, we are certainly seeing different and in most cases increasing cyber exposures and cyber risk. Starting with the fact that there is a significant portion of the working population working remotely these days. We're seeing issues with connectivity and bandwidth. So, for example, someone's home internet may not be as strong or may not be compatible with the systems that employers are needing their employees to use while working remotely. And so that can create issues with employees' ability to perform work, to service their clients, things like that. The second issue that we see with remote work is an increase in hacked home or personal workstations. So perhaps those stations don't have the level of security that a corporate station would have, that someone might have when they're working in an office facility. And so we're seeing an increase in hacks involving those personal devices and personal workstations. The next issue that we're seeing a lot of discussion about deals with data collection and privacy. Obviously, employers have a vested interest in understanding what of their employees or what of their vendors have been exposed to COVID-19 or potentially have contracted COVID-19. And there's certainly a business reason and a personnel reason to understand that, but the concern is there is a limitation on the amount of information that you are allowed to require your employees to disclose. And once you do have that information, if in fact you are allowed to ask those certain questions, you have to be careful with how you handle and store that information. So once you have the diagnoses that someone, say for example, has been diagnosed with COVID-19, and now they've alerted you to that, you have to follow HIPAA guidelines as to how you protect and share that information. The next thing that we're seeing is phishing attacks. And unfortunately, the bad guys or the perpetrators of these attacks are preying on this global pandemic and using coronavirus or COVID-19 themed correspondence, primarily in email, to entice people to open emails, click on links, visit websites, provide credentials, and all of those are being used to further perpetrate attacks. Additionally, we've seen an uptick, obviously, as I mentioned, in remote work, And when people are working from home, they're out of their usual work environment. They may not be as vigilant in reviewing emails before they open them, or in clicking links before they click on them. And all of that is something that the perpetrators are taking advantage of. And so my advice there would be, remind employees of this risk. We know that employees are unfortunately the weakest link in the chain of cyber protection, and reminding employees that this exposure is out there, that the bad guys are taking advantage of this situation to to find vulnerabilities and exploit those vulnerabilities within either your personnel or your technical security. So the employee education piece and the employee training piece is critically important, particularly today. Those phishing attacks, or those phishing techniques, are being used to perpetrate the two risks that you see there on the slide in the gray boxes. So the social engineering and invoice manipulation and ransomware. Those are risks that we were seeing significant increase in frequency as well as severity over the last 12 to 18 months anyway. And then we've seen an additional uptick following COVID-19 in light of some of the things that I've already mentioned. So social engineering is a situation where someone impersonates either a vendor of yours or an employee of yours and directs the organization to wire funds, and you do so, and now you turns out you've wired those funds or transferred those funds to the fraudsters. Invoice manipulation is a bit of a different twist on that social engineering fraud. So invoice manipulation is a situation where someone hacks into your systems or compromises your data and uses that information or that access to send fraudulent invoices out to your clients or your customers. And then when your client remits payment on that invoice, that payment goes to the fraudsters rather than coming back to you. And so now you have an open account receivable, and your client has just paid a sum of money to the fraudsters as a result of a hack of your system. The last one there is ransomware, and this is certainly not something new that we're seeing in the risk space, cyber risk space, but it is something that we're seeing a lot of and a lot more severity of. Kevin, if you want to flip to the next slide. Thank you. One of the things that I want to touch on is, and really the last thing to touch on with the cyber, is that no cyber policy is the same as any other policy. Unlike a general liability or a workers' compensation policy that has a standard form that most policies are written on, the cyber policies don't have that. Every policy is different, and so it's very important to review and understand the nuances of coverage that you currently have or of coverage that you're considering putting in place. One of the big differences in these policies is in the system failure coverage. And so system failure coverage is not something that's included in all policies, but it's coverage for an interruption or a shutdown of your computer systems that is not caused by a cyber attack, but rather is caused by an accidental interruption or an accidental shutdown of your system. So the best example there is a technology failure that renders you unable to do business, either partially unable or fully unable to do your day-to-day operations. And so you lose income as a result of that shutdown. As it relates to COVID-19, certainly those technology failures can continue to be covered by this system failure coverage within the policy. What is not going to be covered here is any sort of civil action that causes an interruption in your systems or your day-to-day operations. So, for example, if you have to take everything offline because there's been a mandatory stay-at-home order, and so your people are unable to come in to your facility, unable to operate the machines or the technology, that is not something that's going to be covered. But those technology failures do continue to be covered under the system failure coverage part.
Thanks, Madeline. Have you noticed the size of any of the demands from bad actors increasing over the past 30 days, or is it essentially a flat demand but just increased activity?
Over the last 30 days, I would say it's mostly increased activity. We have seen a significant increase in demands over a longer period of time. So prior to COVID-19, over the last 9 to 12 months, we've seen a significant increase in the amount of demand. But in the last 30 days, it's been much more of a frequency increase.
Great, thank you. I know we're bumping up against our time. I'm going to shift us to the next slide, which is just a little bit of a look forward. So COVID-19 has brought up a huge array of opportunities, I think, for business to take a deep reflection on itself. When I look at this, I see perhaps a possible shift in future years for insurance buyers, moving away from protection of the actual real property investments and looking more at how do I protect my firm from cyber events, from business interruption related to cyber events. It might be worth looking at your strategy regarding where do I see the biggest weak link in my supply chain and my ability to operate, and perhaps altering the budget, moving some of our insurance expenses away from protection of real property towards more of the digital side. Another opportunity, especially for some of the non-US firms operating in the US, would be take a look at employment practices liability insurance in the United States. Some of the global policies aren't necessarily built to our unique employment circumstances in this country. And as Andy indicated, costs are increasing, but it's worth getting a quote from the insurance market. It's not necessarily cost prohibitive to get into this space. And purchasing coverage sooner rather than later might be a smart tactic. As Andy indicated, the retentions, or in layman's terms, the amount you have at risk should there be a claim with a deductible, those are going up. And it's nice to get in now while it's still a reasonable level. And then on the final piece, there's a renewed focus on health and insurance strategies and costs. We may do another one of these webinars focused almost exclusively on employee benefits, health, and welfare. But for now, I'd like to close it down unless, Matt, from your end, were there any questions that you thought rose to the top?
I would like to just kind of start the question and answer session off here by just saying thank you to the team here at Lackton for the information they have shared with us this morning. It was very topical, on point, and we appreciate the valuable insights. And while we're assembling the questions here and preparing to move on to the question and answer portion of the webinar, I'd just like to point out on the German American Chamber of Commerce of the Midwest website, we do have a COVID-19 resource hub. You know, on that resource hub, our members can find more resources from federal agencies and additional expert guidance from our members regarding a variety of different topics, as well as state by state particular issues there as well. So I do have a couple questions here that have come in, and the first one's not surprising, as I think it's been a question that we've had some members approach the chamber with regarding PPP, or the Paycheck Protection Program. And that question would be, you know, if a firm receives funds from PPP, can I still file a claim under my insurance?
Yeah, the answer would be yes. There's no prohibition against receiving compensation for a covered loss, even if you have received some sort of government protection in the short term for payroll. That may be a piece of information that needs to be disclosed to the insurer as part of the investigation process, but it would not inherently preclude coverage.
Thanks for that, Kevin. Another question here, another hot topic as far as popular, people are hearing a lot about it. I know you guys talked about it quite a bit during the webinar, but I just wanted to know if you had anything additional to say regarding, the question is, I've heard that business interruption insurance is not paying claims. Why wouldn't these insurance companies pay these claims? If you had anything that you wanted to add to what we talked about in the webinar.
Zach, do you want to take that, or do you want me to shoot at that one?
I think the main item on that is that the carriers are looking at the terms and conditions of the policy, and a lot of times it comes down to a physical damage trigger and or an exclusion within the policy that excludes contamination or virus or pandemic.
Yeah, and again, this is a matter that is not likely going to be resolved on a one-by-one basis unless there is no coverage exclusion for virus on a given policyholder's documents, and if they can demonstrate that there is clearly some sort of physical damage. Otherwise, we're really playing in a gray space here. And what we're recommending is that if a firm or a company truly believes that they have a business interruption loss that should be covered, make sure your expenses are very well documented. Make sure any evidence of damage, contamination, et cetera, to the property is well documented so that you don't have a messy submission to the insurer. It's important to be clear on the amount of the loss and the trigger of the loss, so that if there is a submission made for the claim to the insurer, it is specific, it is clear, and it is manageable to go through. That's also the same advice, because if state legislatures or state insurance commissioners direct that the insurers will share some of the costs of this burden of the shutdown, the insurers may not willingly go into that. So similar to the PPP, those who have the best applications and are first in line are very likely to be the ones who are first to receive some sort of compensation from any government fund. So again, making sure that you are tracking your expenses clearly puts you in the best position to receive any sort of compensation available. I'm sorry that I can't answer that just yes, they're going to pay, or no, they're not. But if you listen to a lot of the policymakers in Washington and different state legislatures right now, while some of them are trying to affect change, there are definitely going to be challenges in the courts. And I don't think it's in anyone's best interest to wait on the courts to create some sort of final adjudication here. It's best if you have your ducks in a row and are prepared for any sort of opportunity for compensation.
No, thanks, Kevin. That's fantastic advice. I know in this situation there's a whole lot of moving parts, so and things are changing rapidly. So in order to react to the situation like you recommended, makes some great sense. And I have one other question here for you guys, which is actually, I think it's very interesting, because I don't think it's something that a lot of people have thought about, as far as going through the times we are, and as far as people working from home and maybe having because people are connecting to home networks, maybe having some of their information compromised online. But it's a new topic, I think, for lots of folks, and just getting started. How do you know how much cyber liability insurance to purchase?
Madeline, can you offer some thoughts there?
Sure. So the limits to purchase for cyber liability really depend on several factors. The first is going to be the nature and the size of your operations. So smaller companies would look at smaller limits. We would look at higher limits for those operating in the technology space and the manufacturing space. Healthcare, financial institutions, things like that tend to buy higher limits, whereas other types of firms operating in other industries would look at lower limits. Other things that we consider are the volume of records, so personally identifiable information that you have. How many individuals do you have information on? We look at contracts that you may be signing that require you to carry cyber coverage and understand the limits that are being required in those contracts. Generally, limits start at $1 million for an annual policy term. That's an annual aggregate limit at $1 million. And they can go as high as several hundred million. We have several Lockton clients who are, larger and operating in the financial services or the technology space that are buying in excess of 300 million in limits. So the limits range widely and depend on a lot of factors, but I would encourage you to talk with your insurance broker and understand, what's most appropriate for your risk based on those factors.
Thanks, Madeline. Matt, I know we're over time. If any other questions need to come through, feel free to submit them into the GACC or directly to Lockton or to your insurance broker.
It sounds great. I know we are out of time here this morning, but as it happens quite a bit, it's a lot of information in a short amount of time. So we encourage anybody that is participating this morning that do have questions, please submit them after the fact when something comes up. We'll make sure that we get answers to you. With that, I'd like to say once again, thank you so much for the presentation this morning. It's an honor for us. It's our pleasure to be able to host a webinar like this from a patron member like Lackton in order to get information out that's very important to our membership here at the German American Chamber of Commerce. And again, please, as questions arise during this this time, the German American Chamber of Commerce is the Midwest is a resource, again, with the COVID-19 hub, or reach out directly to us in the office. We are all working from home, working remotely. We're going to be able to get, if we don't have the answers straight away, as demonstrated here this morning, we have a network of firms that are experts and have resources in a variety of topics in order to get any issues and questions you have answered straight away. So with that, I'd like to say thanks again, and please everybody stay safe. And I'm looking forward to having the opportunity to actually getting out and meeting people again in person instead of just having these conversations in an online webinar format. So thanks again, everybody, and have a great day.